What's going on, everybody? Welcome back to the Everyday Growth Advisors channel, where we plan the trade and trade the plan. I hope you guys are having a great day. We had an awesome bull wave on the stock market today, and here we go as we break it down so that you don't need to do it yourself. Very quickly, right before we continue on with this video, make sure you drop a thumbs up and a like, to subscribe if you haven't for daily market updates. We also love hearing from you, so make sure that you drop a comment if you have never before, to ask us to request a ticker symbol. We got two requests in the previous video, which we'll be covering today, which was Apple and Zoom. And yeah, it's been a great week. Also, please remember that we are doing this every single day. So we really appreciate your love and you coming back here to support our channel. Thank you, thank you, thank you from the bottom of my heart. And let's break this market down. So today on the Daily Brief, we're going to be covering mainly, the fact that majority of technology was rallying on CPI data. Yesterday, we put out a video on how to play the CPI data, which was if the CPI data was hard, we would be remaining pretty much bearish, and if the CPI data was weak, we would be playing bullish. And we got CPI data that was pretty soft, right? We didn't expect inflation to be, inflation wasn't much higher than we expected. It was within the range of expectation, and so as we had seen in the report itself, inflation came in somewhere in a nominal range, which was confirming the Fed's projection of transitory inflation, right? The numbers, I believe, were pretty standard. Here, I'm trying to pull it up for you guys so that you can have a look for yourselves. I'll show you right now on my screen. Let's see here. So yesterday we had core CPI about 0.7% versus the 0.4%, very, very in line with our expectation, which was much better. And then initial jobless claims came in just 6,000 above the expected of 370,000. The stock market really liked this because this kind of confirms the hypothesis of the Fed that inflation is going to be transitory in fact, right? This is a really good move. And I think that we are calming down the taper tantrum as we move forward here. So this might cause a bullish wave up in the stock market and a possibility to break out of all-time high on QQQ, and we already broke out of all-time high in SPY, right? Also, you could see that very clearly on the sector rotation maps, money was flowing out of financials. That's why we saw a little dip in the Dow Jones Industrial Average, and the VIX was also experiencing a big wave down today. Small caps were also seeing a little bit of funds leaving, but mainly a lot of money was being poured into the healthcare and technology sectors here. Not only that, levered ETFs were picking up steam with TQQ and UPRO up quite a fair bit on the day. So we can see a lot of money was leaving sectors that have been rallying in the past, and a lot of money was entering sectors that have been weak, which is a good sign, right? We need technology to rally the most because it has been lagging behind, and technology stocks make up a majority of QQQ and S&P 500. So this is a good bullish sign. We broke over key levels, and I'm happy to break down the rest of the market with you today. So let's get into the technicals without a frown, downtown, and let's peel this onion. So with the SPY here, we cleared over the key pivot point to hold yesterday, which was the 422, 423 level. This level was the key level, which I was telling you guys about, which now sets up SPY with the ability to move to the upside into the 61.8 extension at 426. We saw lots of bullish flow on Apple this past week, and so we are setting up for a wave up possibly. Do note that next week we are going to have the FOMC meeting and also quad witching, which are two events that may cause increased volatility. Therefore, even though we are going to embark on a bull wave here, we just have to be a little cautious that it is going to be more volatile than usual. We also saw a abnormally large rug pull yesterday, which was, they were trying to basically clear out any stops, right? There was a huge rug pull yesterday with with multiple times that we saw sell-offs and big buy-ups right after. So lots of pulling from of the rug from the market makers, and lots of interesting price action yesterday. But if you remained strong and you remained in this market, you would have been able to survive through those conditions. You would see some nice upside here. we did successfully close above the key bullish pivot point, and we are heading up more than likely to the 426 level, which is the next level for the 61.8 Fibonacci extension. We are on track to hit there. So it took us a little bit of time to get there, but we are now hitting our target, which we have been plotting for weeks, right? So congratulations to everybody who has been following this channel and has been following our daily brief. We appreciate you, staying with us, and this is about to turn into a interesting ride. Now, the other thing that I want to talk about is QQQ. And QQQ also had a very nice bull rally yesterday, right? One of the biggest rallies that it has had in a long couple of days, right? We had one on the day before and then a couple other small ones, but this was a pretty big one as well. It was a big rally because we finally closed above the 338 level, which I have been talking about, the bullish pivot confirmation. And this is a really nice bullish sign for QQQ, and we may see money come back into tech now that this has happened. As stocks start to rally into all-time highs, we may see growth stocks see a little bit of input, but mainly, as we have been concentrating on our Discord channel for this week, we have been talking about the playbook concentrating mainly on value stocks. And I'm showing you guys the playbook now that the week is over. This is what we had on the playbook for this week. We were mainly concentrating on healthcare, big tech, a little bit of consumer defensive, some select cyclicals, and we were also talking about taking some out-the-money debit spreads on the VIX. Also, the 20-year bond, which had been bid up through TLT, was signaling some risk appetite coming back, and so we were expecting a little nice pull up on equities for the week. Sorry, a little pullback on equities for a week, and then before rising back up, right? So it looks like a nice time to go short bonds again, and then start to take up, growth value stocks, and try to run this up as this goes on. So on the QQQ, we're now looking upward and onward into these key levels. The main level that we want to look at is going to be today is going to be the 342 level, which is going to be the 23.6 Fibonacci extension. As you can see, this is going to be the key level of resistance. This is the upper resistance on the previous high of the QQQ. After which 344 becomes a target, and then 346. If we can somehow reach all of these targets, this would be brilliant for the stock market. But remember that we see possibilities for continued consolidations and continued rug pulls as we continue up in this bull market. Remember that 336 and 334 become your key support for the time being. And if we go below that, then we have a key support at 329, which will become another level of support. So that's your QQQ and SPY broken down for today, and I hope that you guys find that useful. Let's get into a ticker request from one of our comments. Apple, which is now moving nicely to the upside. We see this as entering a bullish pennant, possible breakout here. We may see a wave up from Apple before consolidating and then ultimately reaching our goal sometime next week. This one has some bullish out-the-money options that have been we've seen UOAs on. We do see a resistance at the 128.50 level, and if we can break out of 128.50, that gives us a nice upside target on Apple into the 61 extension, which is closer to the 131 to 132 level. So that's Apple breaking down. Make sure that you don't go super overly bullish until we break out of this resistance. It's going to be a little while till we see all of the money come back into value and these tech stocks. The next ticker symbol that was requested in the comments was Zoom, and on the 4-hour, this has a nice channel breakout. Thanks for bringing this to our attention. We see a nice consolidation in Zoom, which had a couple of anomaly breakouts here, and now we're seeing it move to the upside with some bullish momentum. However, the volume has been decreasing for the past few days, so we have to be really worried about how this is going to move. If we can catch a bid and maintain a break above 346 here, which is the 0 Fibonacci extension, then we will see a extension into the 23.6 at 363, sorry, and then the 373 on the 38.2 extension. So those are the key levels that I'm watching for Zoom. If we can hold above 346 and or 350, then we can take this to the upside and play these two Fibonacci extensions. Mainly, I will be relying on price action to make sure that I will be heading in the right direction. I wouldn't want to apply too much risk to this stock though, because I do foresee that as this economy starts to open back up, this is going to be one of the most shorted stocks in the near future. I don't see that their platform is going to be monetizable in a very a big manner, but we will see what happens. And I think that in the short term, we could see a big run up here to catch these previous highs. So that's Zoom. Short little update on Tesla before I end the stream. We did see a nice little touchdown on the bottom channel. We are seeing a wave up now, exactly as we predicted with Tesla. As we say, we will pull back first and then go back up to the 660s. And now we are seeing a nice little wave up on Tesla with some bad news being priced in. Hopefully, we will be able to break. My main point to see above Tesla for an entry will be above $620 with some bullish price action. I will be looking for that level for an entry to play up to the 660s. Right now, I still don't have confirmation, and so I will not be taking this to the upside just yet. I'm just giving you guys a short little update so that you guys know where my positioning is. And that kind of concludes the daily breakdown today. So let's get over to conclude this session. So once again, make sure that you understand that even though we are in a bull market, there are going to be lots of pullbacks and lots of consolidations that may occur. Be cautiously bullish. Have some, well, I'm going to talk about it in the next daily brief sometime tomorrow. But remember that next week is probably going to be the week where I will start opening mini hedge positions. Because the next week is going to be extremely volatile, I want to make sure that I have some of my long positions hedged against any volatility. And you could do that through buying a debit spread on VIX. You could buy puts on SPY, or you could buy puts on QQQ for shorter terms, like 1 to 2 weeks out, and spend a little bit of money to ensure your positions are insured to the upside. That's a little something that you have to do as a trader to make sure that your returns are forever stacked to the upside. And that gives you a nice little buffer if something goes wrong, that it pays out like an insurance contract to put towards more long positions. So thank you very much for watching this video. We will see you back tomorrow again for another daily breakdown, and that will be the last one for the week. Hope you guys have a great day, and I love you guys. Peace.